Good morning and welcome to the XM.com weekly market update. And Peter Maguire is joining me again from XM. Good morning, Peter.
Good morning, Andrew.
All right, we'll have a look at the Aussie market first off. RBA still talking tough on interest rates.
Yeah.
They have a decision today which will basically say they're going to keep rates as they are. They're not going to drop rates because they basically said they're going to keep them as they are until the end of the year. Now, whether or not that eventuates, who knows? But
of course.
But it's probably more around the dialogue that comes out of that meeting.
Yeah, the rhetoric. We're waiting to hear what the minutes are and all of the discussion points. Naturally, CPI coming out, also the value of the dollar, what's happening in China, and from an export, the appetite of exporting all of our goods. And the dollar's played a nice rally to the upside, considering there you are at the start of August and you're at 65 and now you're at 68.5.
Yeah, so it's two-pronged. Obviously, the higher interest rates here and the lower interest rates in the US as well. So
exactly.
Actually, to be honest, I thought that would be close to 70 by now.
Yes, well, you could have. The US dollar probably still sitting at 100.9, the US dollar index, and many would have thought with that 50 basis point cut, you could have seen 100.5 or even low 100s, but 100.2, but that hasn't been the case.
Yeah. So over in Japan, we had the inflation numbers last week, now sitting at 3%. So it has crept up a little bit over the last few months, which is probably not a bad thing for Japan, considering how low it was for such a long time.
Absolutely. Yeah, we've got some other data coming out, I think, today, and we've got other data as far as Tokyo CPI towards the end of the week. So we've just got to see what happens as far as rate policy, and it's probably a chance you might see a rate hike in Japan before Christmas.
Yeah, well, they've certainly got room to do it. So, and with the yen where it is, it'll give it a bit of a boost as well.
Yeah, I mean, that chart is just incredible since the start of July, isn't it? Look at that for a tail off. But
just going back, what's that? That's a 1 year chart. From a trader's perspective, just the movement there.
Didn't have to trade much else. And you just lay as long as you're not, ridiculously bullish and looking for huge leverage. But if you've just got your indicators on that and just go for a slow, steady, trading perspective, 10-to-1 leverage, it would have been almighty. The return on that investment.
Yeah, no, it's pretty incredible. So, over in the US, we've still got a pretty strong economy over there. Obviously, we had that 50-point basis cut last week.
Yep.
But personal income and spending is up, and we've got the GDP numbers later this week as well in the US, which looks like another solid number for the quarter.
Yeah, exactly. You can't argue with it. I mean, and you also, since we've seen, US equities bounce since the rate cut last Wednesday, so, it was a little bit flat and then all of a sudden off to the races. So, yeah, the data tells the story, Andrew, and let's just see the strength of the consumer leading into, over this quarter. So we've got numbers coming out sometime early October as far as the third quarter, and then how that positions itself, not only an election, but a rate cut possibly on the 7th of November, 2 days after the election. And will it be 50 or 25 basis points?
Yeah, well, there's plenty of talk about the next one, as you say, will be in November, being 50 basis points again, or the odds are more stacked in that favour now as well. Yes. So obviously, things can change in that period of time. But
we haven't got a meeting in October. So.
That's right, yeah. So, but you would think, by Christmas, they're going to be down at least
100.
50 points, yeah.
Well, they're 50 now.
Another 50.
Oh, yes.
At least another 50. So, we could have rates considerably lower by Christmas, so which would be good for the consumer.
Yes.
Rates coming down now. The rates in the US is very different to what rates are here, because most people are in fixed rate mortgages and things, and the mortgages over there are tax deductible as well. So the impact of high rates is probably not as harsh as what we see here in Australia as well. So, gold. First of all, India have dropped their tariffs on gold imports by more than 50% just recently. So, and the imports there are up considerably, which is two-pronged. People want to hold gold from a wealth perspective, and as you touched on off air, with all the celebrations coming up.
Indian wedding season.
And Diwali and whatnot. That is a popular gift.
It certainly is, and of course you've lay over the top of that what the central bank has done, as far as the Indian government has bought enormous gold over the last 4 to 5 years under the Modi government. So the whole appetite across the subcontinent has just been incredible, and you'd have to look at the best part of Pakistan in that, Bangladesh as well. So you've got 1.7, 1.8 billion prospective purchases. It's a lot of interest.
It certainly is, which probably helps to explain this chart.
It is almighty. I mean, look at that. 50 weeks ago, it hit because it tailed off there from 1900 down to 1800 early October. I think that's the low of about October 6, 1810 or 1807. And there you are. And since that, you wrote that off, that chart is in the sense of 26.27. We're now at about 26.50 over the last couple of hours of trade. So that's a big push up. That's been enormous this month. If you're looking there, we're at 24 something, 25 at the start of the month. What you've seen in this month has been 3 weeks of wow.
Yeah, and those pullbacks have only been very minor as well over the last sort of month to 6 weeks.
Exactly. That's 6% in a month. Well, in just over 3 weeks. In anyone's eyes, if gold's up 6% in 3 weeks, that tells you there's some fear in the market.
Yeah, no, pretty incredible. So, but we'll keep an eye on things. As I said, RBA rates today. Swiss have got a rate decision this week as well.
And a couple of others, I think, that a smaller tier, but absolutely, it hasn't disappointed this month, and the chart tells a story, and that leads us into, of course, I think the fireworks of October. Is it going to be a red October?
Could be, and then obviously
election.
Early November is election, so there's going to be volatility around there as well.
Oh, yeah,
for sure. So
the circus is ready to it's ramping up.
It is, because it's been even though there's been a lot of discussion from both parties in the US, but from a market's perspective, it's probably had limited impact at this stage.
Yes.
So, but obviously, as we get closer, depending on policies and whatnot, we'll see a bit of volatility. But the markets, they just tend to move on very quickly.
Oh yeah, they do.
Things as well.
Very much so. There's no disputing that. It's just so much data that gets driven into the market.
That's right. Yeah. So anyway, we'll keep an eye on things and touch base again next week.
I'll look forward to it.
Okay. Thanks, Pete. And that's the XM.com weekly market update.